It's rumoured that Microsoft is looking at a potential supercomputer of $100 billion, that it would be actually, the analysts say, placed next to a nuclear power plant. So there's a whole question mark. We're going into a world where we're trying to transition to zero emissions, and yet the biggest growth in energy and energy consumption is coming from Gen AI. How does the world secure A, enough power to do all of this, but B, to do it cleanly?
Hello everyone and welcome to today's webinar. My name is Josh Gilbert, market analyst here at eToro. Today we're going to be diving into the world of tech, looking at, of course, AI and how investors can find opportunities within tech and further educate themselves around AI and, of course, the opportunities within tech itself. I'm in great company today. I'm joined by Danielle Akuye. Danielle Akuye has a wealth of experience in financial markets and her career has spanned across major equity institutions, making her one of the most sought-after commentators in the Australian financial media. Danny also has two highly successful books, Shareaplicity, A Simple Approach to Share Investing, and Shareaplicity 2, A Guide to Investing in US Stock Markets. If you haven't read them already, then you should. They should be on your shelf, as it will certainly level up your investing. Danny, great to have you with us today. How are you doing?
I'm doing well, thanks, Josh, and thank you for asking me.
Good. And it's great to have you here. And as I say, today we're going to be diving into the world of tech. But before we do get started, a reminder that the content today is intended for information and educational purposes only and should not be considered financial product advice or any recommendation. And this is general advice only. That's out of the way. So as I said, today we're going to be covering plenty of tech surrounded conversations. And we're also going to really look at AI. And today is actually a very good day to talk about AI. We have Nvidia's earnings coming out in the US tonight, arguably one of the biggest benefactors of AI so far. Earnings grew by around about 300% last year, and shares have jumped probably around about 200% in the last 12 months, give or take. Danny, first off, do you think that can continue? And how excited are you about AI more broadly?
Well, that's pretty much the trillion-dollar question, isn't it, Josh, given how much the share price of Nvidia has gone up. It's really, really interesting because there have been quite a few upgrades to Nvidia's share price targets in the run-up to these results, and I'm seeing them now upgrading to around US $1,000, US $1,100. And there are some pretty lofty expectations out there. It looks like revenue growth is going to be of the order for this quarter, the first quarter, of around 240%, and it might be the peak for this year. But really, what markets are going to be focusing on is probably more so than these results, because just judging by what I've been able to pick up, most commentators are actually expecting a beat. But as per usual, as we know, Josh, there's beats and there's beats, and the market will be really looking for an extra big beat and an upgrade in terms of the guidance. And we continue to see that being exhibited not only in the US markets, but also here in Australia, with companies that might even meet earnings. But if they downgrade expectations or they don't upgrade enough, the market's quite quick to punish the shares. So at this stage, it looks like it's going to be a beat, but it's the order of magnitude of that beat. Just generally speaking, at this point in time, the shares aren't that expensive. We've seen the PE multiple contract on Nvidia. So it's circa around 30 times prospective earnings, which doesn't sound too high. And it's not too high relative to where it's traded in the past. But what it reflects is that the market is becoming more circumspect about the future earnings growth, given that, as you said, it was so high last year. So for a company that's that much larger to incrementally grow the earnings again, people are saying, oh my gosh, how much more can they do it? And at the moment, the market's looking, as I said, for about 200% revenue growth in this quarter, probably moderating a bit, but they are looking for earnings growth of a similar order of magnitude this year, and then contracting to about 30% earnings growth in the following year, which by all accounts is not too bad. But for a lot of punters, it's just too racy, the share price.
Yeah, I think that's it, right? I think, as you sort of said there, the expectations are sort of pretty high. And when you're already going into an earnings result with the expectation of it being a B, then you've got to deliver something, pretty sensational to sort of see shares, move higher. And a lot of that is, as we said, then sort of baked in. And the expectation is, given that we've had so many beats and so many raises, that is just going to sort of happen again. So, if that doesn't happen, I think there's definitely some room to the downside coming. But again, they've proven why they are magnificent so many times over the last couple of quarters. So it wouldn't surprise us to see, that sort of rise again. And sort of if we look to sort of Microsoft's earnings, they were sort of saying they can't keep up with AI demand,
Yeah.
and they're sort of increasing capital expenditure. It's going to go straight to Nvidia. I mean, look, it does sort of coincide, Danny, with what has been a pretty decent earnings season so far. AI has sort of featured very prominently over that time. One third of S&P 500 companies have highlighted AI in their earnings calls, and it's been a big driver of the S&P 500 over the last year, and it's a reason why we're seeing so many tech stocks do well. Do you think AI will continue to be a big part of driving earnings and driving markets over the next 12 months?
That is such an interesting question. I've just done a three-part series for FN Arena about the size of, well, just the full scope of what Gen AI is, which companies are set to benefit, and also some big macro drivers about the size of the market. And it's really interesting, Josh, because the forecasts about the impact on global GDP and US GDP, they just seem to be accelerating. And yesterday I was listening to Jensen Huang, obviously the CEO of Nvidia, the CEO of ServiceNow, and Michael Dell from Dell Computing, talking about the fact that they're building basically AI factories, computing factories. And the CEO of ServiceNow was saying that he expects there's going to be a 4 trillion impact on GDP in the next 3 years. 4 trillion. I mean, it kind of does your head in. The numbers are so big, Josh. It's
Mm.
really hard to get your mind around it. And if the estimates were 1 to 3 trillion like a year ago, you're seeing them move out to 11 trillion possibly, or possibly even higher, with McKinsey recently upgrading as high as 20 trillion. Of course, how long is a piece of string? There's so many assumptions that need to be made about large language models doing what they're designed to do, about the cost of compute having to come down. And this is something that Sam Altman talks about, that the more the cost of compute actually starts to come down, the more data that can go through and the more it can be utilized across businesses. But the key takeaway is, and we're actively now using ChatGPT as a tool at FN Arena, and I wouldn't be surprised if most businesses aren't looking to embed some form of AI function, Gen AI function, into their businesses. And that's the point, is that if you don't do it, you're really going to be left behind. And that, of course, was the whole question mark over what Telstra was up to yesterday, with making around 2,800 people out of the enterprise business, letting them go. Is it because AI is going to start to being embedded? I don't think this market is showing any signs of abating. If anything, I find it really hard to keep up with the news flow. And I don't know if you notice that, Josh.
Mm.
It's just this constant, every day, another $1 billion investment here by one of the Magnet 7, one of the hyperscalers, or another 2 billion. I mean, they're estimated post their first quarter results to be spending around $170 billion on data centers this year. I mean, they're massive, massive numbers. And that's why when you look down to what you call the enablers, the Nvidias of the world, which have those GPUs that go into those servers in the data centers, you can see why the top-down picture is so large. And I think it really, at this point in time, people throw around the word bubble very easily. And I did some comparison work to what happened in the dot-com bubble. And Cisco, of course, was the poster child of the internet, etc. Now, it was trading on prospective multiples, to give you an idea back then, of over 100 times PEs, versus where we're seeing, the likes of Microsoft and Google is obviously much cheaper, but they're all in sort of well, they're around mid-20s PEs. But the point is that when we look at the market back then and where the internet has taken us to now, most people probably could never have appreciated back in the 90s what we'd be doing now. And if we hadn't have had the internet of the 90s, we wouldn't have the Gen AI now. So I guess my point is that we can throw around all these forecasts, but ultimately it looks like it is kind of the fourth industrial revolution. But the road to that transition, it's not going to necessarily happen smoothly. In the same way, this transition with electric vehicles, and you and I have been following Tesla for years, is that there's lots of hiccups along the road. There's competition, there's changes in demand, there's going to be cost factors in terms of investing in this new generative AI and all the ancillary hardware and everything else and software that needs to go into it. But ultimately, the biggest companies in the world, which have market capitalizations larger than a lot of countries' GDP, they're putting their money behind it. And I think that, they see the future, and some of them are quite panicked that they're behind the curve. So ultimately, I think it is very transformative, but like anything, there will be potholes along the road, which ultimately could prove to be valuable opportunities for investors. That's how I see it.
Yeah, absolutely. And I think you mentioned a couple of key points there as well. One being, if you're sort of not keeping up when it comes to sort of AI plans, you are falling behind. And I think we've seen that really from the likes of Apple
Mm,
this year, obviously, other than Tesla, the worst performing Magnificent Seven stock. And I think really in terms of their plans for AI, it has been a little bit lackluster. Yes, we've had rumors in the last sort of couple of weeks of a deal with OpenAI, which in turn has actually lifted shares from some of the lows that we've seen of this year. So again, keeping up, Microsoft, Amazon, Meta, these names are the guys who have sort of really come out and sort
mm,
of laid out their plans for sort of AI. And you also mentioned the increase from big tech on spending in AI, and Amazon was one of the names really for me that sort of caught my eye this earnings season, given the huge amount of money they made, the cash balance. We're talking about them and Alphabet, both sitting on around about $100 billion in cash. Alphabet delivered their first ever dividend. Amazon was expected to do the same, but
mm,
didn't. Instead, they said they were going to take the cash pile and reinvest it into areas such as AI, which was pretty surprising because from these big tech names, we had a really long period of cost cutting. If we think about Meta,
mm.
a huge period of efficiency, same with Amazon, cost cuts. Now they're looking to increase those capital expenditures again. I think in previous times, Danny, what we've maybe seen is that worry investors, because they're opening up the checkbook again. But do you think any spending when it comes to AI for the time being isn't going to worry investors? Do you think it's well placed at the moment?
Really good question. And I loved all the points that you made, Josh. They're such great points because the market, the cloud computing market and the hyperscalers had been in a cost cutting mode. And I remember it specifically with Amazon's AWS, and now they're going into expansion mode. The thing that's really fascinating is it's their strength, it's their cash flows, it's their ability to invest that gives them this incredible moat. And if you look at what Microsoft's up to, okay, it's got Azure, second largest hyperscaler, but the announcement this week that they're now embedding their AI into their products, into their PCs, they're going out to try and eat Apple's lunch, breakfast, dinner, and cocktails in terms of saying, look, we're putting Copilot into all our hardware and trying to pitch it at a point in time when a lot of people are potentially looking to upgrade their PC cycle by way of example. Just shows the integration of a company like that. They're controlling one end where they're a hyperscaler, they're operating in the crowd, but they also have the software component and they have the hardware component. So they're effectively bringing Gen AI through Copilot all the way through. Now, I think at the end of the day, it's going to be really interesting to see how the consumer responds to these products. The take up of ChatGPT was the fastest in history. And I wrote about that in my 3-part series, Gen AI Investing in a 21st Century Megatrend. And it'll be interesting because I can think back, and you were probably still in your nappies, but when the iPhone came out, I was so silly. I go, oh, I'm not going to buy one of those. I'm going to go and buy, a Hong Kong Telecom one or whatever, which was really not very great. And at the time, it's like I didn't appreciate what this product was bringing to market. And I guess early adopters will go after some of this stuff, which will justify the expenditure. But to give you an idea of something that I just read earlier on today, that the president of Dell basically reported to Reuters that Nvidia based service with the fastest ramping product in history ever, ever. And I think that's indicative of, you know, maybe at some point these companies will be penalized if they can't monetize the Gen AI. But at the moment, I think the market is giving them the benefit of the doubt. And it will be winners take all. And I think you're going to see a lot of disruption this time round, massive disruption across many businesses.
Yeah, and I think that's it. You mentioned there about sort of the market maybe giving a bit of leeway, and I think no wonder, right? When we talk about ChatGPT there and the uptake that it has, pretty much most people in their day-to-day jobs are probably going to be using it, and it's making life easier, it's making things more simple, and it's only getting better. Some of the big AI conferences that we've had over the last sort of couple of weeks, from your Googles, OpenAI, Microsoft, etc. You say Microsoft embedding it into their sort of PC products. But some of the things that we're starting to see from AI, some of the translations that they can do, and conversations that they can improve, it is sort of mind-boggling, I think, and in some cases maybe a little bit scary in terms of how this is sort of going to transition and how it is going to develop. Because we've already come so far so fast. It's hard to think what we might get in the next sort of 1 to 2 years, and as you said, I think that's why there is so much spend going on. Turning away maybe from Nvidia and some of those big US stocks, Danny, we look a little bit closer to home here in Australia. We do obviously have a pretty small technology sector here in Australia. Obviously, we're dominated by, banks and, our sort of resource.
Resource stocks?
Yeah, maybe a little bit less exciting, but nonetheless, they've delivered, not too bad over the last few years. But we've got some notable names on the ASX that are sort of turning up a little bit in AI. There are, a few tech names that have done well. We have sort of Life 360, the best performing stock on the ASX 200 this year. Are there any names that jump out to you on the Australian market that are sort of are really sort of well invested in the AI space, or are looking to sort of take advantage of this, AI boom?
Yeah, it's really interesting, and I don't want to dish the resources sector too much because obviously there's copper prices at record highs, and there's potential copper shortages, and for a lot of this investment across a green economy and also electrical components, you do need a lot of these, critical minerals, copper, etc. So our resources sector does have an integral part to play in this big industrial revolution. When you look at exposure in Australia, I remember writing last year in my former job, I was actually writing for IG, and I talked about data center operators and those with exposure. So the likes of NextDC and Macquarie Technology, and also, the name's just skipping my brain, Goodman Group and Megaport. So Goodman Group has really been an absolutely outstanding performer, and people go, oh, that's industrial property, it's a REIT. But they've actually positioned themselves, and they are ideally positioned to capitalize on the undersupply of data centers that we have here in Australia. So when people look at investing in the Australian market, there's a number of different ways to break it down. So there are those, the enablers, that are the data center exposed companies, and I can run through a list there. And then, as you say, there are those companies that are more actively involved through supplying, let's say, software services and that like. Now, Dicker Data is a company with a case in point. They recently recent results disappointed the market. Few technical reasons why, but they're supplying the likes of new Adobe products. And of course, Adobe is injecting Gen AI into all of their products. You've got Data 3 also there. And so the suite that's available here in Australia, including the power supply companies, the AGLs and the Origins, also have a role to play because data centers gobble up massive amounts of energy. And that is a whole exhaustive topic on its own, Josh, which of course brings in the uranium story. And that, of course, goes back to resources. There's almost not a sector that is not going to be impacted by this. And I think it always goes back to how companies are going to monetize it. And a classic upgrade that I saw yesterday and was writing about, and this comes off the back also of what Michael Dell and Jensen Wang were saying about embedding the likes of Copilot into PCs, etc. Well, a broker has just come out and upgraded Harvey Norman and JB Hi-Fi and Wesfarmers because of this PC upgrade cycle. People haven't bought one since, dare I say, we're all sitting in lockdown, heaven forbid, 4 years ago. So those companies are potentially beneficiaries in spite of the fact that you've got some macro headwinds. I don't know, Josh, but to me, it looks like there's a whole lot of options out there for investors. How do you see it?
Yeah, no, absolutely. And I mean, it's a great point you make around the sort of the JBs and those sort of consumer discretionary names. It just shows how far the reach of this sort of technology wave is sort of reaching because, again, we think about, we go back to that sort of the old adage of sort of the picks and the shovels. And it really is that, thinking about, yes, Microsoft updating their PCs and, we've got that PC versus Mac war that's sort of coming back but then to then think, JB Hi-Fi are then going to sort of see larger sales on the back of that is sort of a really interesting sort of view. And I think that's, really something that investors can dial into, not just sort of really looking at those main, benefactors that we've seen with Nvidia, but sort of trying to find some of those names that are really going to benefit from, the overall spending and the overall development of AI, because as you said, Danny, it is going to affect a lot of industries. And really we've still got names keeping up. You mentioned Megaport there. I wrote a piece probably in the last sort of couple of weeks about sort of Megaport, and they've actually sort of kept pace with Nvidia in terms of how high shares have moved over the last sort of 12 months, and just simply because they're allowing businesses to connect through data centers across the world through very simply through their sort of services, and the increase in their spending is huge. And what they're sort of really seeing is when a customer comes in and starts spending with Megaport, they're organically increasing their spending over time to their higher margin products. They're spending more money once they're embedded. And I think that just goes to show that their business is obviously a very high quality business, but they're showing companies what they can deliver, and companies are obviously benefiting massively from that, therefore increasing their spending. So yeah, as you say, Dan, a lot of opportunities here locally that can benefit.
Yeah, and I've just brain ticking over. Macquarie, worth pointing out, they have a stake in AirTrunk, as does Global Data Centres, which is also listed here in Australia. And AirTrunk, of course, hasn't been listed at this stage. There's also Infratel over in New Zealand, which has a stake in the Canberra data centre, which is getting a lot of government work. And there was another one, Promedicus, really interesting. I wrote about that. RBC Capital did a report saying they saw Promedicus, which of course again has been another very strong performer. And they're also working with the likes of Apple in terms of their new Vision Pros for reading radiology reports, but they are looking at how they can use generative AI as well. And I think the thing to focus on is like, if you're not hearing solid reports of how a company could be potentially using this to their advantage, I mean, it'll be really interesting to hear what Xero has to say this week in terms of their cloud-based accounting software, what they're doing, but also the likes of WiseTech Global. These are big technology software companies working in complex markets like logistics. Surely, with great databases, you'd think that Gen AI has a role to play in that one. So I think for all companies, whilst not wanting to get taken away by how many times the AI is mentioned in the earnings call, I think again, companies that aren't doing anything about how they're using their data, how they're investing for the future, and our banks are a classic case in point. Josh, our banks haven't invested for the future, as nor is Telstra. It's in this problem, and it puts their dividends at risk. So it really, this whole investment thing with Gen AI takes us back to the basics of investing. You want to love those companies that can generate the big cash flow and invest for the future.
Yeah, absolutely. I think, Danny, so far we've obviously spoken about quite a lot of the benefits of AI and sort
Mm,
of how tech is, sort of flourishing at the moment, and also right at the top of the webinar, you sort of took us back to sort of the bubble of the tech stocks in the 2000s, and obviously that obviously came crashing down again, a slightly different era, really. But as I said
very.
as well, you wrote a couple of books on sort of share investing and sort of some of the risks, and obviously in there's a lot of education for investors. So I just wanted to sort of ask you in right now is what do you think some of the risks are with investing in these tech stocks, and how do you think investors can sort of educate themselves to sort of navigate this period?
Yeah, it's just to put hands up too. I do own a few of these stocks. So I do have Nvidia, I've got AMD, I've got Pro Medicus, I've got Microsoft. So just be aware, folks, none of this is recommendations. And when I mention these stocks, I do own some of them, but I typically am comparing them to what the brokers are saying. Within that context, how do you invest in technology? Well, clearly it all went totally pear shaped when the interest rate cycle changed, didn't it, Josh? All those big loss making companies suddenly got themselves in a world of pain. Really simply, for everybody, when interest rates go up, valuations become compressed, and that has to do with the fact that the cost of capital has gone up, but also companies that are not generating enough cash flow and have a huge ton of debt suddenly have some really big issues to stay profitable. And Carvana in the US is a classic case in point. They've been able to refinance that. At the moment, it's really interesting because everyone's saying, "Oh, it's a bubble, it's a bubble, it's a bubble." I actually don't see it as like 1999 was or 2000. I mean, stocks were a lot more expensive at that point. Also, a lot of them were loss making, Josh. There's a whole heap of companies that had just disappeared off the face of the earth. Um, but like anything, it's always much better if you're looking to set positions in some of these companies that are at 52-week highs. And my gosh, there's a heap of them out there, including non technology stocks, waiting for a pullback in markets, which there will be at some point in time, is probably best if you're going to go in and actually buy shares directly as opposed to the good old drip feed into the ETF product. So I think at the moment, Nvidia is probably the biggest thing this week. I mean, some of the Fed speakers are also coming out, et cetera, et cetera. And I think I think the Fed minutes as well. I stand to be
Mhm.
corrected. But Nvidia could move the markets, and you could see like options are pricing a 7% move each way in the Nvidia share price, not so much in the S&P or Nasdaq. But I wouldn't necessarily chase stuff because there will be pullbacks. That's how I adopt it. I always think you go for the quality, the market leaders. If you look at some of the picks and shovels, it's Taiwan Semiconductor, TSMC in Taiwan, that actually makes all the chips and the GPUs, or it's an ASML who produces the huge lithography machines that TSMC uses. So you really want to pick the winners in each of those spaces. But it is worth us, I think, pointing on some of the obstacles to growth around energy, how we're going to get enough energy to power these supercomputers. I mean, it's rumored that Microsoft is looking at a potential supercomputer of $100 billion, and it's so ginormous doing this with OpenAI. that it would be actually, the analysts say, placed next to a nuclear power plant, Josh. So there's a whole question mark. We're going into a world where we're trying to transition to zero emissions, and yet the biggest growth in energy and energy consumption is coming from Gen AI. How does the world secure A, enough power to do all of this, but B, to do it cleanly? And that, I'm afraid, is a question that nobody's really answered at this stage. And just so your listeners know, in Australia, we have enough power to support the expected expansion in data centres in Australia up to 2030. Meanwhile, we're still trying to transition.
I was actually watching the news yesterday, Danny. I don't know if you saw it, but there was a lot of conversation around potential blackouts this year coming as well.
They're keeping a raring open. Yeah,
Yeah, so
yeah.
I think it's really
Mm,
interesting, especially when we see the increase in AI usage, and as you
mm.
say, we come back to copper and the need for that, and the potential deficit that we may have there, and obviously that's why we're seeing BHP, trying to acquire Anglo
Anglo
American again.
American.
Exactly. Again, Anglo American hasn't had a great couple of years, but they've got quality copper mines that clearly BHP want a piece of. And it's not just BHP, it's Rio and Glencore. They all want a piece of that pie. We've spoken a lot, Danny, about AI, and I wanted to maybe just to look a little bit more broadly at tech. Again, a lot of themes within the sort of the tech industry, lots and lots of businesses. Are there any specific themes within tech, maybe outside of AI, in Australia, outside of Australia, that you think are also particularly promising, that you're sort of looking for at future growth? Again, you spoke about mega trends. AI is really taking that, but anything else that's sort of catching your eye?
I've noticed there was a big upgrade the other day. Have a look at Zero. Zero's had quite a big upgrades, and I think there's some expectations that they're really going to become much more cash flow generative,
Mhm,
and they're going to do very, very well. It is premised on doing better in their UK market and also the US markets,
mhm,
but it's not about getting more market share. It's just them about picking up more customers in different sectors like family offices and things like that. Technology One had some great results yesterday, and they've been upgraded as well by the brokers. So the price targets there have moved up. Well, the stock's racing so hard at the moment, it's going to be at the price targets between 18
yeah,
and $19 because they are typically, management are quite conservative, but they have upgraded the earnings expectations or the growth outlook for next year. In terms of technology in Australia, it is a select few, and I think the biggest question, and probably you get it as well, Josh, is our companies are quite expensive relative to the rest of the world. So why should investors be there? And the only thing I can ever say is you want to pick them up on sell-offs. Like Pro Medicus got thumped a few months ago, and of course it's back up to all-time highs. It's not cheap, but it is growing. So it always comes back to this factor of like, if the companies can continue to grow over time, then hopefully their ratings will not be downgraded too much. I don't know. Do you have any sort of special stocks that you like? You mentioned Life 360. I mean, that's been an absolute cracker, hasn't it? And yet, it's really interesting that NASDAQ listing there. It's like, not so sure why are they doing that. Have you got any thoughts on that one?
yeah. I think with Life 360, it has been a business that's done very well. Again, they've had a few sort of price upgrades or sort of increased prices along the way, and we've seen how that's worked for the likes of Netflix over the last couple of years, increasing those subscription costs. That's obviously really benefited them. And again, the same thing I think really comes from Life 360, talking about AI and how they're sort of going to bring that in, cloud-based technology in there as well. But also, I just think the general development of technology is helping a lot of other businesses. I was sort of reading some sort of broker upgrades yesterday on ResMed, and
Mm,
one of the ideas behind the I think it was JP Morgan upgrading the stock, and one of the reasons was because we're seeing a technology shift towards a focus on sleep. So we have these Whoop
mm,
bands, we have Apple Watches, and more people are coming conscious over their wellness and ultimately sleep wellness, which
mm,
is actually seeing more people realize that they actually may have sleep apnea or sleep issues. And they say that ResMed believe there's 1 billion people in the world that
Mm.
have sleep apnea but go untreated. But now they're sort of seeing this huge upgrade from the technology to focus on sleeping, that we're now going to see a huge demand for ResMed's devices in the future. So it is really interesting how technology is going to affect a lot of other businesses and a lot of other stocks. It isn't maybe as direct as we sometimes think, but as time goes on, it can certainly affect other businesses. And it just goes to show that going back to that sort of picks and shovels idea, is that it is really interesting. It's not just those simple stocks. We think about
No.
someone wearing an Apple Watch. Yeah,
Mm.
it's great for Apple, but again, there's going to be lots of other companies that benefit from that as well.
Mm. And great point on ResMed. It's really, there's a lot of stuff coming up about, as you said, how many people have sleep apnea. The other one is Cochlear, which hasn't really done very much recently, but there's still a huge growth runway there because they have discovered that hearing impairment actually accelerates dementia and Alzheimer's.
Mm.
So there's also too this, what I was writing about, increased one-sided deafness coming out. Heaven forbid, it's probably been people sitting on their
Yeah.
mobile phones or doing something for too long. But there's another case in point of a company at the forefront of technological innovation,
Mm.
actually for decades, one of the world leaders when it comes to hearing assistance. And as you say, there's lots of software being embedded as well in these companies. So I think you're going to healthcare is a really great example too. And healthcare, financials and healthcare and consumer products are three of the top sectors globally that are going to be the adopters in Gen AI.
Yeah, and that's it. And when we were looking at sort of AI the other day, and I was talking about that sort of translation coming through from ChatGPT, one of the stocks that didn't benefit was Duolingo. Shares actually fell by about 7 or 8% afterwards. So then
Yeah.
there's going to be stocks that benefit, and unfortunately, there's going to be some of those stocks that aren't as fortunate. And as we say, even someone like Telstra, for example, that cutting jobs now to sort of try and catch up. Again, they've been hit pretty hard by by investors over the last few days, that they're sort of not impressed with the steps they've taken. Look, either way, Danny, the world of AI is certainly changing our lives. There's going to be plenty to watch over the next few years. If you want to keep up to date with AI and specific stock content, make sure you're following eToro Australia on X, and make sure you're following Danny and all her work. And as I say, make sure you read those books. And of course, head over to the eToro Academy. You'll find guides, videos, podcasts, and much, much more. Danny, it's been a pleasure having you on today. Thank you so much for joining us.
Oh, pleasure. It's been great to chat, Josh. And I guess we'll be checking in via Twitter. I think it's around 6:30 a.m. tomorrow morning when those Nvidia results drop.
Yeah, absolutely. It'll be very interesting to see what they do, because it's going to move the market either way, and I'm sure everyone's going to be watching that. Thanks everyone for watching. See you next time.